Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we are going to be talking about Quant and QNT. So sit back, relax, and before we fully jump on into this video, I do just want to ask guys to please leave a like on this video. It does help the channel grow immensely, and of course I always do greatly appreciate it. Now, overall, I don't want to focus too much on price as this video is recorded a little bit ahead of time and scheduled for later. But I will say this, it looks like QNT is holding that crucial fib level at around $118, almost $119. It's funny though, because it looks like we have bounced off of that exact level perfectly. It's almost kind of scary how exact it was. I could actually show you real quick on the chart. Here we have it. So, again, this is what is kind of telling me that the bottom is in for Bitcoin and altcoins. I mean, look at this. This was a perfect retest of the support zone going back to the week of March 21st. Now, when we talk about this, right, 118.85. We hit 118.84. This tells me that we are holding this line. This is support. Now, what I do want to see in general for QNT is I want to see a clear break above resistance because we are still in a very bearish formation on the chart. Again, I don't want to take too much time to focus on the price because, like I said, this is scheduled ahead of time. Anything could happen. But I do want to see a break above all three EMAs here because this is significant resistance, which will ultimately test the 200-day EMA, having that break up above my key targets. That is what I'm watching for right now on QNT. Now, I do want to talk to you guys about things happening right now within the quant area. So, as we are seeing more and more talks around regulations and things like that, I do want to kind of reiterate things that happened in the past, going back to October of 2021. So, here we have Visa news, how my central banks, businesses, and consumers seamlessly exchange value across blockchain networks, no matter the currency, right? Again, this is through cross-chain interoperability, but I want you guys to understand that focus on the bigger picture here. We do see Gilbert Verdian mentioning here ODAP. So if you guys don't know what ODAP is, it's basically powered by Quant Network's Overledger. But we just here very glad to see the reference and adoption of ODAP, Open Digital Asset Protocol, our effort with MIT at the IETF to standardize cross-chain and cross-network transactions, and the importance of digital asset interoperability at gateways. Again, here you have a spotlight from Visa themselves, utilizing ODAP, powered by, again, Quant with MIT. I want you guys to understand the clear vision here. I want you guys to understand where Quant is, positioned. They are a critical piece for the future of finance. We see here, Quant, we welcome the evolution of money with this announcement from the ECB for creating a digital euro. Our CEO, Gilbert Verdian, recently discussed our vision for the future of financial systems with interoperable CBDCs. Listen closely to this.
So we're going to use a complementary cash, which is a tokenized money, which is a central bank digital currency, in a different way. And for you and me, it's just going to be, we're going to have our current account. It's going to have pounds and dollars and euros in there, but next to it there'll be a digital pound and a digital dollar and a digital euro. And it just means I can actually tell that money and program it to do things that I couldn't before, such as if this delivery happens and I'm happy about it, then pay the supplier. Don't make a payment. It's conditional unless X happens. So for me, it's going to mean I have better control and a better way to spend money and receive money because it's trusted and it's a CBDC. It's backed. It's not a speculative asset. So for us, it's a privilege to be able to work with this technology and lay that infrastructure where this technology will live on. It's quite transformational to lay the tracks for the future of money and the future of transactions. So what we've been doing is making sure that these currencies that the governments will issue and these central banks will supervise are interoperable. That's core to our technology. they work across borders in a frictionless way. You don't have to be limited to your country and your jurisdiction. You can spend that money anywhere globally. And what we're looking to do is make that a reality within regions and connect the regions to each other so we can actually be the bridge between different jurisdictions.
Again, I just want you guys to see the vision here. Okay, with the ECB moving very, very close to a euro, a digital euro, as we do see over here, April 8th, 2022, ECB executive board member talks about current state of digital euro CBDC research, and here we have it, right? It's likely to become a necessity in terms of CBDCs, but warned that they should not become a source of financial disruption that could impair the transmission of monetary policy in the euro area. This is also where, he basically said that it's going to unlock efficiencies. It's going to give you control of your money. It's not going to replace fiat at all. But I do believe that when we are talking about the demand for CBDCs here growing and growing and growing, does it put a little bit of a risk on fiat? Slightly, yes, it does. But I don't think that the retail individuals are necessarily chanting and raving, "Hey, get rid of my fiat currency, give me a digital currency." No, nobody is saying that. In fact, if they do, I really want to talk to you and tell you exactly what you are giving up. I've always supported wholesale CBDCs, which essentially is exactly what he's talking about. But also, he's talking about a little bit of a better model here in terms of retail CBDCs, where he's discussing the idea on you have your bank account and you have the choice to utilize digital dollars, digital pounds, digital euros, whatever the case may be, and also your fiat currency. You have the choice between both, which is crucial for the success of a retail CBDC. Do not, control it to the idea on making it necessary or a necessity for individuals to get rid of their dollars and only hold digital dollars. That will only be a disaster waiting to happen. But I don't believe that that is what they're trying to do here. But I will say this, when we are talking about CBDCs, there is one crucial piece to this, and that is interoperability. We also see here South Africa has moved one step closer to a CBDC after the South African Reserve Bank concludes a technical proof of concept for the project. Again, all of this is focused on DLTs, by the way, which of course will be powered by interoperability. I want you guys to understand that CBDCs are moving very, very quickly. In fact, we do see the overall view here on where things are headed. Proof of concept is being launched around the world globally. When we look at this and we discuss things happening within the realms of everyday life, there's a ton of research, going on. There's a ton of launched projects. Well, I shouldn't say ton of launch projects, but there is a few launch projects. There's a ton of pilots, ton of proof of concepts. I mean, overall, from the overall view here, things are rapidly evolving, and you can kind of see the timeline evolve. Don't know if they do. So actually, yeah, they do. So here you have a little bit of a viewpoint on things where research really kind of started to happen back in 2014, right? As we kind of moved into 2015, I don't want to go to 2016 so far, but as we do march into 2015, a little bit of, a few things changed. And then we've seen a little bit of another shift, right? So here's December of 2016. This is where crypto started to really kind of grow. Then we seen the 2017 bull run. So here we have again November 2017. And now you see proof of concepts launching, right? Now, as we do kind of march into 2018, this is where the big shift started to, happen. This is where, a lot of areas were kind of really researching it. We see a kind of update. We also see, pilots happening. We still see proof of concepts, and then 2019 really hit. This is where we kind of seen a little bit more of a move on things. Again, a little bit more of some research going on. We also seen a few canceled projects, but then we also seen a little bit more proof of concepts. And then here is COVID. So COVID really streamlined a lot of viewpoints on this. So by the end of 2020, or I should say the beginning of 2021. End of 2020. We'll just go to the end of December 2020, right? This is where we did see pilots launching. This is and in major areas like this is Canada, right? But then we also seen the U.S. moving into research. Why? Well, because COVID streamlined this process, and now here we are, 2 years later, and things have rapidly evolved. Over the course of the next year, things are going to look very different on this chart. Why? Because we are already seeing major demand around CBDCs, but also as crypto regulations continue to grow, again, this is where a lot of crypto does get a main focus point. We actually see Bank of Japan officials call for G7 nations to adopt common crypto regulations. It's all focused around regulatory frameworks to quickly access the technology behind crypto. We look at things and we talk about things happening right now around the world, and we look at these settlement systems. We look at, payments in general, cross-border payments and things like that. It's all focused around one major area. It's regulations. Before we fully adopt this technology, before we fully, move in on this, we really do need regulations in store. And again, the G7 is major areas. I mean, this is Canada, France, Germany, Italy, Japan, the UK, and the United States. All of these major areas need to adopt in an overall regulatory framework that works for all. Okay? And why? This is focused on, again, CBDCs. We do see here, using stablecoins makes it very easy to create an individual global settlement system, which would in turn make it easier for nation states, to evade more traditional and regulated payment systems that use the U.S. dollar, euro, or yen for settlement. They are talking about an urgency is paramount for the G7 nations to effectively coordinate regulation of cryptocurrencies and digital assets, as the current regulations do not fully consider their growing adoption and proliferation throughout the world. So, as you could tell, there is an urgency around regulations because we do see the idea of moving into a new settlement system, a new age of, again, this new payment infrastructure. We look down here and we do see here that to issue a CBDC in Japan will most likely be reached sometime in 2026, depending on the speed at which CBDC adoption occurs throughout the rest of the world. We've been seeing this, skyrocketing in terms of adoption. So it tells me that these nations are going to urgently move in on, again, CBDCs. And we do see, again, nothing is growing as fast as cryptocurrency. I want you guys to understand where we are positioned right now within this market. We are so early on crypto. Now, what does this actually mean? So, as crypto is continuing to move and move and move towards a mass adopted area, more so crypto continuing to grow and grow in demand, we are going to be seeing a heightened demand around CBDCs and digitization of again, traditional payment systems. All of this leads me back to the one key element, and that is QNT. QNT will play a vital, pivotal role within the future of finance, but also even the current view of finance, because interoperability is, again, the main puzzle piece. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or beautiful night wherever you guys are on this beautiful world. It's been Nick. Peace out, guys.